Nvidia is back in the headlines, making waves once again. This time it's about their H20 AI chip and its journey to China. This move isn't just a minor adjustment, it's a significant event that's shaking up the global tech scene, causing ripples across industries and continents. The implications are far-reaching. This isn't just about one company's product strategy or market share. It's about the complex intersection of cutting-edge technology, intricate geopolitics, and global economics, all colliding in a high-stakes arena. It's about the delicate balance of power and influence in the digital age, and the economic forces that drive innovation and competition. For Chinese tech giants, companies like Alibaba, who are at the forefront of technological advancement, and Baidu, who are investing heavily in AI research and development, access to Nvidia's advanced hardware is not just beneficial, it's a lifeline, fueling their AI ambitions and enabling them to compete on a global scale. The H20 chip, a marvel of modern engineering, was specifically designed to skirt the stringent US export bans, a testament to the ingenuity and adaptability of the tech industry. Its journey has been a roller coaster, initially banned, then unbanned, a reflection of the shifting sands of international trade and regulation. This is a high-stakes game with billions of dollars at stake, where every decision can have profound financial consequences. This decision highlights how every move made in Washington or Beijing, no matter how seemingly small, can ripple through the entire global tech supply chain, impacting manufacturers, distributors, and consumers alike. The resumption of these sales is more than just a business win for Nvidia. It's a significant signal of shifting global tech alliances, indicating a potential realignment of power and influence in the industry. We'll break down the complex series of events that led us to this point, analyzing what it means for Nvidia, its competitors, and the broader landscape of the AI chip market. And crucially, we'll explore what this development could mean for the future of US-China tech relations, a relationship that's critical to the global economy. Let's dive in and unravel this complex story. The H20 chip exists. It's a marvel of engineering, pushing the boundaries of what's possible in semiconductor technology. This chip represents Nvidia's response to a complex geopolitical challenge. Its very existence is because of US export controls, regulations designed to limit the flow of advanced technology to specific countries. These controls are a key tool in the US government's strategy to maintain its technological edge. These export controls are primarily aimed at limiting China's access to advanced semiconductors, a critical component in everything from smartphones to supercomputers. The restrictions are intended to slow down China's technological advancement in key areas. When the US tightened restrictions in 2023, the impact on Nvidia was immediate and significant. These weren't minor adjustments, they were sweeping changes that reshaped the landscape of the semiconductor market. Nvidia's top chips, the very ones driving their most profitable sectors, were banned from export to China. This created a major problem for the company as China represented a substantial portion of their market. So in a display of engineering prowess and strategic agility, they engineered the H20 to comply with the new regulations. This involved redesigning the chip to meet the specific criteria set by the US government. But the regulatory landscape is ever shifting, until even that was banned, creating further uncertainty and forcing Nvidia to adapt once again. The goalposts kept moving. This constant back and forth left Nvidia with billions in unsellable inventory, chips designed for a market they could no longer access, warehouses filled up with cutting-edge technology rendered useless by policy. The ban resulted in a massive revenue gap, a significant blow to Nvidia's financial performance. Investors grew concerned, and the company's stock price took a hit. Recognizing the severity of the situation, CEO Jensen Huang, a key figure in the tech world, met with President Trump to discuss the implications of the export controls. And soon after that meeting, the US reversed course, signaling a shift in policy and a potential easing of restrictions. This unexpected turn of events offered a glimmer of hope for Nvidia. This reversal allowed H20 sales to resume, providing Nvidia with a much-needed opportunity to recoup some of its losses and re-enter the Chinese market. However, the financial hit was real and undeniable. The period of uncertainty and the initial ban had already taken a toll. Nvidia was forced to write off $5.5 billion in inventory, a significant financial write-down reflecting the value of the chips they couldn't sell during the ban. And the company lost an estimated $15 billion in potential sales, representing the revenue they could have generated had the ban not been in place. The stakes were enormous, not just in terms of dollars and cents, but also in terms of Nvidia's reputation and its ability to compete in the global market. This wasn't just a challenge for Nvidia, a single company navigating complex regulations. It was a test of the entire US tech sector's global leadership, a demonstration of its ability to adapt and innovate in the face of geopolitical pressures. The H20's return isn't just a business move aimed at recovering lost revenue. It's a calculated decision with broader implications. It's a strategic pivot in a high-stakes tech rivalry between the US and China, a battle for dominance in the world of artificial intelligence and advanced computing. It shows how quickly policy decisions made in Washington can ripple through the global economy, impacting companies and industries across borders. It highlights the intricate relationship between business, government, and international relations in today's interconnected world. It's a stark reminder of how geopolitical tension can directly impact the bottom line of even the most successful companies. And for Nvidia, a company at the forefront of technological innovation, it's a second chance to reclaim its place in a critical market, to demonstrate its resilience, and to continue pushing the boundaries of what's technologically possible. Why fight so hard for China? Because it's a tech goldmine. China contributed $17 billion on 13% of Nvidia's revenue last year. Losing that market would cripple Nvidia's growth and innovation budgets. But it's not just about sales, it's about ecosystem lock-in. Chinese tech giants build on Nvidia's CUDA platform, making it tough for competitors to break in. If Nvidia lost China, local players like Huawei would fill the gap, eroding Nvidia's dominance. By resuming H20 sales, Nvidia protects its revenue and keeps its software ecosystem entrenched in one of the world's most important tech markets. It's about defending the future, not just the present. The H20. It might not be a household name, but this unassuming piece of silicon is the star of this geopolitical drama. An AI accelerator meticulously engineered to comply with stringent US export regulations. These rules are designed to prevent cutting-edge technology from falling into the wrong hands. But crucially, it's still powerful enough to significantly contribute to China's booming AI sector. It walks a fine line, balancing performance with political realities. It's definitely not Nvidia's top-of-the-line flagship chip. It's been strategically dialed back. But under the hood, it's based on the same advanced Hopper architecture that powers Nvidia's most potent offerings. This shared DNA is key, and perhaps even more importantly, it works seamlessly with CUDA, Nvidia's proprietary parallel computing platform and programming model. This CUDA compatibility makes it an almost indispensable tool for Chinese developers already deeply invested in the Nvidia ecosystem. It lowers the barrier to entry and ensures a smooth transition. The H20 makes calculated trade-offs, sacrificing some of that raw, high-end performance in favor of regulatory compliance. It's a delicate balancing act, but despite these concessions, it remains a powerful and versatile workhorse, perfectly suited for a wide range of commercial AI applications. Initially, Chinese companies approached the H20 with a degree of hesitation and uncertainty. They weren't sure if the performance compromises were too significant. But ultimately, the sheer power and comprehensive nature of Nvidia's established ecosystem proved too compelling to resist, drawing them back into the fold. And now, with sales figures steadily climbing once again, the H20 is poised to play a pivotal role in fueling China's ambitious AI development plans and technological aspirations. At least that is, until the next iteration of export regulations potentially reshapes the landscape once more. The future remains uncertain. In the end, the H20 represents a carefully crafted compromise, a delicate balancing act between technological capability and geopolitical constraints. But despite its compromises, it's an absolutely critical component in the ongoing AI race. And perhaps most importantly for Nvidia, it allows them to remain a significant player in the crucial Chinese market. Nvidia isn't betting everything on the H20. Enter the RTX Pro GPU, a new, fully compliant chip for China, designed for digital twin AI applications like smart factories and city simulations. It's less powerful and cheaper than the H20, targeting a broader range of enterprise customers. By segmenting the market, Nvidia maximizes its reach while staying within US rules. The RTX Pro is a safety net. If export controls tighten again, Nvidia still has a product to sell. This two-pronged approach shows Nvidia's adaptability in a volatile regulatory landscape. It's not just about loopholes, it's about building a sustainable business in China. Nvidia's biggest rival in China is Huawei, whose Ascend chips have surged thanks to US sanctions. While Huawei's hardware still lags in performance and software maturity, it's immune to US export controls, a huge advantage for Chinese buyers. The real battle is in software. Nvidia's CUDA platform is deeply entrenched, while Huawei's Can is still catching up. The return of H20 sales puts Nvidia back in the fight, but Huawei is now a serious, permanent competitor. This rivalry will drive innovation and give Chinese companies more options, if they're allowed to choose. The landscape has changed, and the competition is just heating up. Nvidia's return to China hints at a cautious thaw in US-China tech tensions. Both sides are making small concessions, lifting some chip and mineral export controls, to keep the global supply chain stable. For the tech industry, this means less uncertainty and more room for long-term planning. It's not the end of competition, but a shift toward managed rivalry instead of all-out decoupling. A more stable environment benefits everyone, from chip makers to software developers worldwide. But the strategic rivalry isn't going away. National security will still drive policy. Nvidia's approach, compliant products and high-level dialogue, offers a blueprint for navigating this new era. The future of tech will be defined by how well companies and governments balance competition and cooperation.